Good morning, everybody. It's the 7th of April. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How are you?
All right. It's a little bit chilly this morning, though.
It is a little bit, isn't it?
Gordon Bennett.
My son's off to soccer school shortly, and I've had to wrap him up in all sorts of layers to try and keep
Yeah.
him warm.
Connor's doing his a bit of school club coaching this morning as well, and he had to sort of he was looking for his woolly hat that I was wearing at the weekend. I couldn't find it anywhere, so he wasn't very happy.
No, I can imagine.
But yeah.
Cool. So a bit of Champions League action last night, which we just touched upon.
Yeah.
Still, you've got a chance, haven't you? I suppose. I know you're a couple of goals
Yeah,
down,
I think really, I mean, for Liverpool not to concede in the home leg, I think is a bit of a tall order. They're obviously the defence is a bit of a makeshift one, not good enough really to progress any further. They might get lucky, but I doubt it. Man City were sneaked a win. They sort of went conceded just a few minutes before full time, then went up the other end and scored.
Yeah, very much both open though. I think those ties. Anything can happen in the second legs.
Yeah.
Is it next week?
Next week,
2 weeks time?
Yeah.
Oh, cool.
No, I think it's next week. Don't have to wait too long.
Lovely. Okay, so on to news in the markets then. So UK is set to start rolling out the Moderna vaccine today. The first shot has been offered in Wales, making it the third approved vaccine to be offered in Britain. In Europe, they seem to be getting a handle on things as well and expect most member states to have sufficient vaccine supplies to immunise the majority of people by the end of June. I think the issue there will be more on the uptake, because I think there is a little bit of resistance from certain areas of certain countries that are not sort of too keen, and you can sort of understand it because we're getting a lot of news trickle out about things like blood clots, and there was another one yesterday, wasn't there, about them stopping it in children as well. But we have started to see, certainly in the UK, more people trickle back to the city, but on the flip side of that, we are seeing more restrictions being called for in places like Germany. So clearly, we haven't got a full grip on the situation just yet.
Yeah.
On sort of macro side of things, the International Monetary Fund said that the global economy will expand by 6% this year. That's up from the 5.5% pace that they estimated in January. That would be the most in 4 decades, although it does come obviously off the back of the worst peacetime decline since the Great Depression. And according to the IMF, China will contribute more than 1/5 of the total increase in the world's GDP in the 5 years through to 2026. That's according to Bloomberg calculations. European futures slightly lower today after they rose to a record yesterday. Asian equities were steady overnight. Retail investors in Deliveroo will be able to cut their losses for the first time since the IPO, should they choose to do so. The stock's roughly down about 28% from its IPO last week. That's pretty much it from the headline side of things, unless, Steve, you've seen anything else?
Well, it's funny you mentioned that on the indices. China 50 had a big sort of sell-off in the last few hours. Yeah, sort of hit last night around about 2 o'clock.
What are you seeing on the chart? You got it up?
Yeah, just sort of like, oh, hello, not looking too clever here. But it has stalled just in front of the horizontal resistance. 17,000 really sort of supporting that. 17,115 was the overnight low, and we've sort of bounced back a little bit since then. But we had this bit of a shocking bearish candle at 2 o'clock this morning. Bit of a wake-up call. Everywhere else, though, I mean, look at the FTSE. It's taken that 68.10 level and said, what 68.10 level? It's just gone bang, broken out of the triangle formation and extending higher and looking to target. Shame that my trader, my Talking Bull trade gun to head challenge wasn't running overnight, but we're looking to sort of like head all the way back up to the 69.60 area, which was the previous swing high of this year. Looking really nice and hot this morning. Buying dips in there isn't a bad shout. Doesn't look as good if we pop across to the DAX on the hourly chart, but it's trading within the Ichimoku cloud, so there'll be some form of support here. It had a pop-up higher and rejected at the moment, but again, wouldn't be surprised if that gets dragged up. Across on the Dow, still trading around all-time highs, so no change there then. Seems like a broken record. And as you said yesterday, Joe, we're sort of seeing, we think looking at this sort of topping formation that we've seen on the NASDAQ, and it's broken higher, but it's only back up to really where we could say maybe there was a left shoulder and a bit of an indecision on the daily chart yesterday. So little bit of nervousness creeping in over there. S&P's has broken above the 4,000 psychological level, which we've been talking about for yonks and yonks. What a great word. And we've obviously got this trend line resistance, which we're retesting now. So 4,000, what's the high on that? 4,086 on the S&P, the all-time high. But again, as we say, yesterday's doji in NASDAQ has got a hanging man candle in S&P. So is there much life in it today? We'll see. I mean, FTSE seems to be the daddy amongst all those at the moment. On to the oil. I've done an oil video this morning, may publish it later on LinkedIn, and really talking about this daily trend channel that we're in. However, we are seeing signs of a possible stall in this rally. Obviously, oil, one of the most manipulated markets ever. And we've seen this reversal formation, which we likened to an evening star formation, but there was a hanging man candle. So it's a hanging man reversal formation. And if we look at the MACD as well, moving average convergent divergence, which is a trend following indicator, that's crossing over. So there is potential for a correction lower in the old oil, crude oil. Let me just try and get a possible flag formation here. I mean, doesn't look great. I think we need to get a break of 57.16. Head and shoulders formation, sort of. It's not great. It's not a very clean neckline. So, you know, and it is quite a complex formation, because you had the first shoulder here. That could be the start of a neckline. It would look a bit tastier then. Then we formed another shoulder, left shoulder, formed the head, almost like a double head, and we've formed double right shoulder as well. So it could be a complex head and shoulders formation, which are the most reliable, but the neckline for me isn't very clean. I'd really want to see a break of $57 before I got excited about that. I think there'll be a bit of a vacuum between $57 and $54, where we saw this price action previously just move up really nice, not a lot of resistance, not a lot of backwards and forwarding. And I think normally when you get that, you get a break of that previous support, and you'll get a really quick washout back to $54. Don't know what the catalyst will be for that, but there's plenty of reasons that oil isn't worth this much. But, you know, obviously when you've got OPEC and OPEC plus nations and the whole world manipulating the price, then what can you do? Anyway, moving on before I get shot by the Secret Service. We've got the gold price. That is, again, we've got this potential double bottom formation on gold, where we saw the rejection again of the 1677 level. The neckline that we've got to watch is coming in at 1756, a break above there, and I expect we will get an extended move higher. The measured move of that would be taking the bottom of the formation right to the top and planting it right there on the breakout. So that would see a move back up to 1834. Let's have a little look, see if that lines up with any fib levels. Not far away from the 61.8% retracement, which is one of the lovely retracements we see in technical analysis a lot of the time.
Yep, I like the look of that this morning.
Yeah, I mean, it does. It does feel a little bit like that. We need to see. Obviously, the dollar is going to be the real sort of like gauge, 92.30. So that's off again today. So yeah, is the dollar stalling? Maybe Joe can tell us.
Well, maybe, yeah. It does look like it could be stalling a bit. Thanks for that roundup, by the way, Steve. So first up, looking at the currency baskets, as you can see, the blue line is the dollar index, and that has flattened off certainly today. And over the last couple of days, we've seen a little bit of a dip. That's that there, as you can see. And obviously, everything else is moving higher. So a little bit of maybe a reversion to the mean on that at the moment. If we look at dollar index on a standalone basis, the correction continues, and the first support that we had at 92.50, which was what I hoped would find some support following the break that we saw back at the end of March, hasn't held so far. So we're heading down to the next support I've got, which is at 92.16, and we're stalling just in front of that at the moment. So we'll see what comes of that. Maybe we can get a fib. Yeah, so we've got a 38.2 down at 91.82. So we could see a reasonable correction down to this sort of level again. But certainly in the short term, I think the bias is still reasonably bullish. But we'll have to wait and see. So obviously that will be bullish for the likes of gold if this correction continues. So we may see a little bit of a push up in that, that's for sure. On the flip side of that, euro dollar, that's continuing this bounce from roughly this 38.2% level at 116.95, and that's pushing up higher towards resistance levels that we've got up here at 119.50-ish. So we'll wait and see if any sellers re-emerge around this kind of level here. Yeah, for now, looks like it's having a decent go to the upside. If we look at cable, this is an interesting one. We've seen the break of this channel here, but also a break of a wedge, so it's kind of in two minds. We saw a decent push up and a pull back to retest the broken wedge. Are we now going to see some buyers re-emerge with some dollar weakness and for a continuation higher in cable? If we look at the riskier assets like Aussie dollar and New Zealand dollar, I'm still of the opinion that we've got a head and shoulders top pattern that's formed here, and what we're seeing at the moment is a retest of this neckline, and it's failing to get above that. You can see on a couple of occasions we've tried to have a little bit of a poke above, but it's just not happening yet on these currencies. So I think we see a correction down to this kind of level here, which is at 72.35 on Aussie US dollar. And it's a similar situation on New Zealand dollar, US dollar. We saw a break of this wedge, potentially a bit of a top pattern forming here. We saw the break down below 7100. And in the last few days or so, we're arguably having a bit of a retest of that level. So maybe potential for a little bit of a squeeze higher before the sellers come in. But we are seeing some weakness today on that of around about 1/3%. But ultimately, I think the targets are down here at 67.35. So not necessarily bullish in the very short term on the dollar index, but these riskier assets like Aussie dollar and New Zealand dollar don't look particularly great either. So we may see some lower prices there. If we look at the dollar index versus some other currencies, first of all, we look at the dollar Swiss. Obviously, we've seen this correction down to support here that we have at 92.96. Wait and see whether the buyers re-emerge at this point. And if we look at dollar yen, we touched upon this on a number of occasions previously because of this big break of trend, which goes all the way back to here, which is 2015. So we've had a bit of a break above that, and now we're in the process of pulling back to maybe retest the other side of the trend line and see if there's any buyers that re-emerge around that level. So a bit of froth coming off the top of this, maybe a bit of profit taking, and we'll have to wait and see whether or not we get any buyers re-emerge around this kind of zone here. That's pretty much it for me on the currencies. Let's have a look at what we did yesterday on the gun to the head, if you're ready, Steve.
Oh yeah, I'm ready for it.
Okay, so FTSE yesterday, you had a 0.44R winner, which is a bit gutting because we just had a look at the charts this morning and it's absolutely flying. So had you held that position or followed Steve in on that yesterday, then you'd been doing quite nicely this morning. Would you have hit target, Steve? You had a target
Not
of
yet, no. Still,
69.35.
no, it's just the last couple of hours. It's really sort of gone into overdrive. Still a little bit short of the target.
And I went
65, yeah.
short of Aussie yen, which was looking better than where it finished at 9 o'clock at some point through yesterday. Only finished 3 ticks on side or 0.09R on that one. I still like that today. I haven't had a chance to have a flick through the charts just yet on what I fancy today. But Steve, hopefully you're going to come up with an idea now while I have a look.
Well, yeah, I mean, I think I'm sort of going with you on the dollar yen, really. It's it feels like I've got my Ichimoku cloud, which is my one of my go-to indicators. We've broken lower this morning, taken out the previous swing low here at 109.96. So I think sort of like below the 110 level, pretty good from a psychological standpoint. We've had a little bit of a test of the water down at 109.58, and we've bounced from there, but then we've formed a shooting star candle with decent volume. So I'm going to go with a really tight stop on this. Let's get it in there. 109. What am I happy to risk? Right, let's go 109. Yeah, why not? And we'll go for a nice little 4-to-1 risk reward on there. Stop coming in at 109.95. Probably a bit tight, but it will take out. It still has to take out these 3 previous swing highs, if not the 4th one as well. So yeah, getting short here. 109.82.5. Stop at 109.95, and the target of 109.32.5. 4-to-1.
Excellent. I'm struggling because it's all a little bit not where I want it to be, but
no,
I've got a gun to my head, so I've got to do something.
Yeah, not ideal positions.
Okay, so I'm going to take a look at Aussie US dollar. I just talked about it on the daily chart, and this is what I'm seeing. So this is the head and shoulders top pattern. We got the break of channel as well, and today we are posting a bit of a reversal. We're already down 0.35% on that today, but I still think, you know, we're seeing some decent rejections at this neckline there. It's a upward sloping neckline. So looking at it from an intraday basis, then I've drawn a bit of a kind of wedge, I suppose, on the daily chart and the intraday chart, hourly chart. If it breaks down below these lows, then I think it really could start picking up a bit of steam, and if we get a break of this this wedge as well. So it's a bit speculative at this point, but I like the setup on the daily chart, so that's what I'm going to go with. I'm going to sell it now at 76.35, stop loss at 76.81, and I'm going to target and move down to this swing low here at 75.34. So only 2R on that one today. I mean, I do like obviously much lower targets off the back of this head and shoulders top, down at sort of 72.35. But you know, realistically, that's not going to happen on an intraday basis. So if you did want to use this as an entry point and stick with the trade over the longer term, then you could be looking for 8R, 8.25R on that one.
Nice.
That's the ultimate target on the head and shoulders top. So that's 2 trades for you today to take a look at. Anything else to add, Steve?
No, not really. No, can't think of anything else.
There is a fair amount out today in terms of data. So we've got at 130 US trade balance. The deficit is expected to widen to $69 billion. At 3 p.m. we've got the Canada IV PMI index is expected to rise to 62. And then at 3:30 we have the US crude inventories number. That's coming off the back of a 0.9 million reading, which was the first drawdown in 6 weeks. So between 3 and 3 p.m., we could see some volatility in oil off the back of the Canada number, and then obviously the crude inventories. And then at 7 p.m. tonight, we have the FOMC minutes, and these will be covering the latest minutes from the meetings and looking at commentary around the decision to leave policy unchanged. So we could see some more volatility around 7 p.m. this evening.
Excellent.
Cool. All right. Well, I think that wraps it up for today. Best of luck, everybody, if you're trading, and we'll be back tomorrow morning.
Cheers.
Have a good one. Bye.